Okay, excellent. So let's get started. So thanks everyone joining us on this lunchtime. We're going to go through this project, plot 789 Nelson Road. So for anyone who's familiar with that address, it's because we had a phase one raise a few months ago. So I'll explain that in more detail as we go through. But the key thing to say is that the security for this particular raise is related to these plots 7, 8, and 9. So anyone who invested into the phase one, your security is assigned to those other plots, 1 to 6. It'll all become a bit clearer as we go through. Okay, so before I get into the hello from Source Capital and tell you a bit more about who we are, for anyone who's joining this webinar and maybe isn't too familiar with the whole peer-to-peer world, so peer-to-peer is often also referred to as crowdfunding, but actually there is a fundamental difference. So crowdfunding, which might be, I suppose, if you've ever invested through Crowdcube or Seeders, those types of platforms. So what you are when you're investing through crowdfunding is you're an equity investor. So that differs in a fundamental way to peer-to-peer, because with peer-to-peer, you are a lender. We're talking about debt this time. So you are a lender, in our case with Source Capital, to a property developer. And in return for being a lender, you are you get security in the form of a first legal charge. So if you're an equity investor, you kind of live and die with the company. I suppose you're at the bottom of the pile in terms of getting your money back. So if you invested into something on one of the other platforms I mentioned, then if the company goes pop, that's your money gone as well. So it's a fundamental difference. This is why our investments are called secured investments, because the security is the first legal charge, and that's effectively what your bank has over your main residence if you've taken out a mortgage. Okay, so I hope that's nice and clear. And I'll just jump into this slide now. So yeah, Source Capital made up of a blend of different people, bringing an array of skills, expertise, and experience to the project. The directors of Source share over 100 years of property experience and over 20 years of financial services experience. That covers investment banking, payments, consumer lending, peer-to-business lending, and peer-to-peer property lending. I'm actually a former chief risk officer of a bank in Malta, and I've worked across various areas of financial services, and I've also got shares in a property company around Harrogate as well. So yeah, not just me, others within the team have their own property and investment portfolios and continue to work on their own developments as part of Source. So as property industry leaders, we use our experience by carefully selecting projects and overseeing them, ensuring they're the best projects for investment for Source Capital investors. So that's me in the top left, Stephen Wallis. I'm the operations director at Source Capital. I think probably a fair amount of you will be familiar with Stephen Moss in the middle. He's our managing director. And if you've ever had a conversation with somebody in the team about investments, it's probably John Wilson, our relationship director, who you've spoken to. And Emma and Paul are also key parts of the team working in other functions. Okay, so we've got flagship developments across the UK with a pipeline of over £277 million. We've got over 100 offices across the UK. I said 110 because I think it's pushing 120 now. So this is how our model is quite unique. Well, it is unique actually in the peer-to-peer industry, because we only lend to our network of franchisees. So with other platforms, they'll have projects which come to them, whereas our model is that our franchisees, our network, and you'll be hearing from Chaz and Jazz later. So these guys are out every day sourcing projects around the UK, and this allows us to diversify quite nicely based on geography, which isn't always the case on other platforms. So we have 100% repayment success to date. Actually, one of our recent projects, so past performance is not a reliable indicator of future results. Obviously, I think we all know that term, but one of our recent projects, it was in Barnsley in a village just outside, and that project actually repaid early because the properties which were finished as part of the project, they sold off plan and quickly. I think probably a lot of people listening to this, there's a lot of stuff going on, especially this year in the UK and around the world. But actually, the property market in the UK has held up quite well. Things like the stamp duty threshold increasing, so less people are having to find that money for the stamp duty, which is normally a big upfront cost. and just other things as well, people relocating maybe as well outside of London. So these sorts of reasons are why we've seen actually solid performance from all our projects this year. So we also charge 0 fees. So we don't charge anything to get into a project. We don't charge anything ongoing as a management fee, and we don't charge upon maturity. It's possible to earn up to 12% per annum returns, and I'll explain a bit more about how that's possible later. It's important to note that investments are suitable only for sophisticated and high net worth investors. Capital is at risk, and there's no financial services compensation scheme protection. So in terms of that sophisticated and high net worth, the FCA have a template that you can fill in, which says, which basically is where you self-certify that you're one or the other. In peer-to-peer, it's slightly different in that you can complete an appropriateness test on our platform when you register, and that means that you're showing that you are sophisticated enough to understand what it is that we do. Okay, so in terms of our values, so customers are at the heart of everything we do. We're fair, transparent, and want to continue to improve our service, providing a high level of trust to our customers. We have a commitment to those customers. Like I say, we're transparent. We take risk seriously. I already mentioned my background. I've actually got a qualification from the Institute of Risk Management as well in financial services. We're honest. We value diversity and innovation, and we seek constant improvement in what we do. Okay, so we're starting to get into the details now of this particular project. So the office is Source Coventry. You'll see that the particular project isn't in Coventry, and that's because the way that our franchise model works is that the guys will have I suppose, an area that they cover day to day. But then if they come across a project which is not part of anyone else's network, it's for them to take it forward. There's no issue with competition or anything like that within the network, as long as it's on a patch that no one else is looking at. So we've got Jazz Malai, and we've got Chaz Singh as well, and the guys have got over 30 years combined experience. I'll get onto that in the next slide. We've performed a credit check, a financial review, and an AML check as well, anti-money laundering. So Chaz is a chartered management accountant, program manager, been developing and refurbishing properties for almost 10 years to establish his own personal portfolio. And Jazz has over 20 years experience in buy-to-let sector with a current portfolio valued at over £2 million. And he's also a company director of I4C Publicity, and that's been for over 19 years as well. Okay, a bit of information about the main contractor who are already working on the site, which has already been being developed. So these guys, Lane Homes Construction Limited, have been trading since 2016. They've got a reputation GDV portfolio of over £10 million. They've worked on projects up to 11 units, which fits nicely into the fact that the phase 1 and the phase 2 is 9 properties on Nelson Road. And here are some projects that they've completed. You can just see there's the big one at the top. Okay, for anyone who doesn't know too much about Clacton, so Clacton-on-Sea, you can find it on the map obviously quite easily. It's one of the largest towns on the Essex Sunshine Coast, bustling but affordable seaside resort. We'll get into a bit of information later from the guys about what the estate agents are saying about the project. It boasts an array of entertainment facilities, including a pleasure pier, arcades, and some theatres as well. There's also a golf course, seafront walks, obviously water sports, and an airfield offering pleasure flights. So it's become quite an attractive destination for tourists, obviously, especially this year. So this the land itself and the project that we're talking about is on a quiet residential road. The previous property on the plot's been demolished, and the first phase of 6 terrace houses are in works. There's some photos there. There was also a video which the guys did about a week ago, which I'm sure John could share with you for people who get in touch after this webinar. The additional 3 terrace houses will be constructed in one block of 3, as per the planning permission, which has been issued by Tendring District Council. So here's some images of the properties as they're going to look at the end. So you can see there, really high quality, That's obviously what I think every borrower with source capital who borrows through source capital, sorry, is aiming for, and I think that's what always gets delivered as well. And here's some images that just show you there with where you can see the full plot with the parking out the front, the house itself, and then the gardens as well. And there's just some information on the layouts as well there. So in terms of the location, so actually maybe I'll get the guys in just to talk a bit more about this one. I've just given the high level information here. So it's a short walk from the town centre on a quiet road of residential buildings. Local amenities and train station are a 5-minute drive or just a 17-minute walk. Beach access is actually at the end of the road that these are being built on. You can see it there with the pin. And it's also just minutes from the local hospital. So for anyone who's not too familiar exactly with transport links, so the A133 leads straight into Clacton-on-Sea, which means that there's excellent connections to the wider area, routes to Chelmsford or East London as well. And the properties offer sea views. Okay. Sorry, just checking my notes there if that was the right moment. Sorry, guys. Right. So the growth here. So what's been going on over the last 5 years in terms of housing prices? So it's actually interesting that when I was only doing these webinars about a month or two ago, that increase in the price over 19 to 20, 2019 to 2020, sometimes there had been a drop off, but actually it's continuing to increase. So if you look over a 3-year period, there's an 8% increase in house prices, 22% over 5 years. And I think this is due to, that ripple effect of this is the type of location which will benefit from people who are looking for a bit more space, a bit more clean air, especially if they don't have to go into an office anymore in London. People are going to be looking for nice places to live. We've seen the same thing happening where I live in North Yorkshire for a number of years. And I think that what's been going on this year has just accelerated that work from anywhere aspect to people's lives. Bit of information there on average salaries and the average house price as well in the area. And this is just a bit of information on the legal. So the conveyancing has been carried out by Sterling Ackroyd Legal. And a clean title report has been produced and provided to the platform for sign-off, and the charge, registration transaction on behalf of Source Capital has been completed by Loosemore Solicitors. Okay, so getting into the details now and the numbers. So the borrowers purchased this plot of land in August 2020, so only a few months ago, and the phase 1 raise of the development was done through Source Capital. This is for an amount of £1.103 million. The first phase project plan consists of building 6 terraced 3-bedroom townhouses. In the second raise, the borrower, this time Chaz and Jazz, will be raising £660,900, and this is for the build of the additional 3 3-bedroom townhouses. So that's plots 7, 8, and 9. As with the first phase, the planned exit is to sell the properties within the 10-month term, generating an estimated profit margin of 20% on the sale of the 3 houses. The drawdown of funds will be released in stages upon submission of a monitoring survey report. Investors get a first legal charge on the 3 properties, and we share those monitoring survey reports with all investors, by the way. The exit strategy is to sell the houses, which have already gone on the market off plan. There's strong demand with viewings already taking place, and 1 house has already been reserved, which is obviously very promising. Okay, so as I say there, so the forecasted GDV is the one thing we were missing from the previous slides. It's £1.035 million for those three properties. The interest rate that's on offer to investors is 10% per annum, and there's a bonus interest, of 2% per annum on investments over £20,000, which just happens to tie in with the annual ISA allowance. Loan term is 10 months, and repayment of interest is at the end of the term. Loan security comes in the form of a first legal charge and the borrower's equity. And just to confirm there that planning has been approved. A RICS independent valuation has been completed to back up the GDV, It's SAS compatible for those who've taken control of their pension in that way, and also ISA compatible. The minimum investment is £250, and it's important to note that returns are not guaranteed and capital is at risk. Okay, so here's a bit more of a breakdown. So there's the purchase price of £175,000. The cost of works is £560,900, which means that the total cost for this second phase is £735,900. There's been a cash injection from the borrowers of £75,000, which is how we get to the total loan required of £660,900. The day one loan to value of current valuation is 70%, and the borrower's equity equates to 30%. The finance costs are £95,279, and the developer profit after the finance cost is £203,820. Okay, and an all-important number at the bottom there that we haven't mentioned yet is that the loan to value of the GDV is 64%. We lend up to a maximum of 70%, so it's nicely within that threshold. It's also important, we think, to stress the GDV. So obviously, well, we'll get the guys to explain a bit more about how the demand's been going and viewings, but yeah, I suppose within the banking world, it's always important to stress that number, that final valuation. So if the sales were to be 10% less than we thought, then it would reduce the developer profit down to £100,320. If the market was to drop 20%, the guys would make a small loss, but it's important to tie that £828,000, which is now the forecasted GDV at that 20% stress, to the repayment of the total loan, £660,000, plus the finance cost, which is more or less the interest and then some fees that we charge the borrowers. But even in that scenario of the 20% drop, the full capital plus interest would be repaid. That's better illustrated on another slide that I'll show. Okay, so as we've already said, the exit strategy is to sell the properties. Every project is evaluated looking at if the loan repayment schedule and borrower's exit is realistic, to ensure the most secure and profitable plan is followed, and Source Capital employ solicitors for every loan that's provided who work with the borrower's legal advisor as well. And there has been valued higher than during the previous phase. And again, I'll get the guys in a second to talk about that. This is because the current market and demand in the area has increased actually since the phase one first began. So there's a link there on Rightmove if you can make a note or just type in Nelson Road, Clacton-on-Sea. I'm sure you'll find it. And it's important to say that a refinancing option has been agreed in principle should the open market sale take too long. And just to reiterate, we pay interest at the end of the term, so you don't get paid every month, for example. Okay, so we've already mentioned the security. There's a first legal charge. It's registered against the property for the full loan amount by the solicitors acting on behalf of the security trustee. And for anyone who joined the webinar late, it's important to note that there is a clear distinction between the first legal charge on the phase one and on the phase two, which we're talking about today. So the borrowers have put in £75,000 of their own funds into this phase of the development. And the funds are released in stages upon the borrower providing a monitoring surveyor report and approval from the security trustee. So Source Capital is the trading name of JARC2 Limited, which is an appointed representative of rebuildingsociety.com Limited, and you're welcome to check both the numbers there on the relevant registers. Okay, so just here, I always like this tab because I think it just shows the situation in terms of how much that GDV would have to drop before it touches a penny of the investor interest. So you can just see there that we've got the 1.035 GDV. That's GDV. That's the whole bar there. And then we've got the equity that has been put into the deal, 75,000. There's then the profit, which is around 200,000. And so because the investors have a first legal charge, those people get paid back first upon the exit. So if things were to take longer, or if the sales price were to drop, or if there was a refinance and the mortgage provider for the refinance downvalued, there's that safety margin, we call it, to protect the investors. So it would unfortunately be Chaz and Jazz who would actually take the hit there for any decrease in the GDV or upon remortgage. Okay, so these are forecasted values. It's important to note capital is at risk and there's no financial services compensation scheme protection with peer-to-peer. Okay, so I haven't got Chaz or Jazz into the call yet, so sorry for that, guys. I know it's been a lot of you listening to me talk, but actually there's a couple of questions. So we had a quick chat yesterday. So Chaz, maybe you could just talk us through a bit about how the phase one has gone, and especially regarding any delays due to the lockdowns and things like that we've all been having to adhere to. So yeah, if you can maybe unmute and just tell us a bit about how things have progressed and how the guys have managed to work through any restrictions.
Sure. Yeah, sure. Good afternoon, guys. So far, I mean, I generally visit the site since it started once a week. So I've been very involved in it from the start. And progress is actually on schedule. We haven't had, touch wood, we haven't had any problems whatsoever. We did think at one stage that we had to do piling, that would take longer than expected, but we took time on that. And generally, the only thing that we look for is the weather that sort of like can deter us. In terms of COVID lockdown, what we did do prior to that, we bought a lot of materials on site beforehand, just in case there was a lockdown. And again, the builders have another site where they're accumulating a lot of the stock now, just in case there is a lockdown and there's a shortage of material. So we're sort of like thinking ahead. And again, I'm down there tomorrow and speaks to the estate agent as well. And looking at the Gantt chart that we have, we're about a week ahead of schedule. Okay. So that's where we are. Block 1, block 2 is coming on very well. And we're at, on block 2, we're on level 1 now. The floor's being put in tomorrow. And block 1 is just following on nicely as well. So it's all on schedule so far.
Brilliant. Okay, that's great. Good to hear. And then, yeah, Jazz, maybe I'll direct this one at you. So the obviously we talked a bit about the sales, but I think it's probably important for people to understand that although we get a RICS independent valuation, obviously you guys are then speaking to the estate agents and getting their feedback from what they're seeing, in the local area. So maybe if you could just explain a bit about what we're finding in terms of the ability to then sell these houses at the end.
Yeah, sure. So we're dealing with the estate on a regular basis, Callum. We had the brochures finalised and printed off yesterday. At the moment, as we stand, we have one going through legals at the moment, one of the properties, and we have a further 23 inquiries, and we've asked for further information. The project is very unique for the area because it's very predominantly built up with apartments on the seafront, and also houses that are pre, 1950s, 60s maybe. So a lot of them are sort of like tired now. So this is a new project to the area, and that's why the estate agent was so excited about it. And we initially thought we were looking at the GDV based on 325. We got so much initial demand, and he put the feelers out to potential people in the area, investors. And he said, Jazz, he goes, I don't think we're going to struggle. We're not even going to struggle at 345. And that's what we did. And as soon as we put it on the market for 345, the first inquiry came in about 3 to 4 days. And he is the one that's purchasing it. So that's where we are with it at the moment. But people are excited to finally see houses in the area, along with, work from home as well. And again, the beach is 30, 40 meters away. There's a playground to the left of it as well. Yeah, so amazing. In terms of location, fantastic.
It's amazing. I think I've got to make a trip down to this one at some point. I really want to see it. I went over to Hull a few weeks ago to see how that one was going. Yeah, I'd love to. I mean, being so close to the beach, I can't really believe it. But Yeah, well, I'm sure I will when I come and have a look on site.
And the real nice thing about this development is all 9 houses have sea views. So, you know, level 1, level 2, no problem at all.
Brilliant. And I think, so Chaz, maybe one for you. So I think we were talking yesterday as well about the Help to Buy scheme, and also just that there's a different type of buyer than what you anticipated. There's actually people who are potentially looking for holiday homes as well.
Yeah, sure. So in terms of Help to Buy, we are marketing that quite a lot at the moment. So we'll just come in within the timescales for the final Help to Buy scheme. So we're really marketing that and really pushing that for potential customers at the moment. So the timescales work perfectly for that. And you're right, in terms of our current market, we anticipated second-time buyers, so looking for a slightly bigger house and slightly more room. They're 3.5 bedrooms. But with everything that's been going on and so many people working from home, we're actually advertising it as 3 bedrooms plus an office, which is fantastic, and another great marketing sort of idea really from our estate agent, that we are close enough to London to kind of get that commuter market. And now that so many people are working from home, there are so many people looking to get a slightly bigger house with an office that they can kind of shut themselves away in and be in and feel like they're in an office environment. So that's another sort of angle that we're working on at the moment. But yeah, more recently, and in particular, the chap that's put the offer in for the plot number 5, he's looking at it as a holiday home himself, and as a potential investment. So we've been talking to the agents about serviced accommodation in the area. Really, as far as Clacton goes, there isn't a great deal of serviced accommodation. It hasn't really hit Clacton yet. Probably one of the few places that it hasn't hit, but there isn't a lot of serviced accommodation around. So we think that could be fantastic from an investor's point of view. These properties, as we've said previously, they're on the beach. It's literally a stone's throw away from the beach, and a 2-minute walk to the pier. So in terms of trying to attract holidaymakers and sort of visitors, they're ideally placed. And so we're also looking at that angle as well. So there's quite a number of different markets that we're going to look to approach here.
Excellent. All right, that's great. No, brilliant insight that. So yeah, and I think it is, isn't it? You know, regardless of what we've been hearing the last few days about a vaccine, I think staycations are, you know, they were kind of already on the up before 2020, but I think they're only going to increase. And yeah, so yeah, I can definitely see the reasoning for holiday investment. Just seeing a question come in on the chat. And just a 10-month period. Okay, just had a question about what's the interest on 10,000 or 20,000 investment over the 10-month period. So the interest rate is per annum. So it's 10% per annum up to £20,000, and £20,000 is the magic number at which it moves over to 12% per annum if that's invested into a single project on the Source Capital platform. So I hope that helps. So over a 10-month period, yeah. So John, our relationship director, John Wilson, could go into the specifics, but yeah, it'd be 10 months of that rate. Okay, so I'm sorry, that just coming on the chat as well. Okay, so yeah, guys, I'll just carry on now, and if you can mute again, that'd be great, and I'll just carry on with the next few slides, and then we'll see if there's anything further to add as well. Okay, so as I mentioned right at the start, for people who managed to join at 12:30, so our borrowers are part of the Source network, so that means they are our franchisees. And this means that they have support from the network, from the head office. So we assess the project, or that side of the business, sorry, assesses the project and helps to manage the launch. We then get involved at the point at which it comes over for a credit risk assessment onto our side, and we then help to facilitate the project through the platform and obviously do the marketing from our side. There's support for the borrowers at each phase of the project, and there's cumulative experience in the property industry of over 100 years when we look at Source as a whole. Covering property sourcing, development, property sales and lettings, and property funding. So this is tying into that question we received in the chat and Q&A. So there's bonus interest, which is where if you invest a minimum of £20,000 into a single project, you will receive an extra 2% per annum return at the end of the term. So 12% per annum instead of 10% per annum. There's also a £50 bonus. So if you invest a minimum of £500 and you can receive £50 cash back at the end of the term on your first investment. It's important to note that your capital is at risk. Investments are subject to our terms and conditions. Peer-to-peer investments are not covered by FSCS, and you can find out more about all of this by going to our risk statement there on the website. There's different ways to invest. You can invest just as a regular investment. So this is instantly online from £250, get a return of up to 12%. And just to reiterate that security, all loans are secured by the registered first legal charge against the property. We also have an IF ISA, which stands for Innovative Finance ISA. You can select individual loans and invest up to £20,000 tax-free per tax year, receiving those 12% secured returns. Tax treatment depends on individual circumstances and may be subject to change in the future. For those who've taken control of their pension, you can invest through a SIP or a SAS. This makes your pension work harder for you and comes with the flexibility to select the individual loans that you lend to. And just again, once more, investments suitable only for sophisticated and high net worth investors. Your capital is at risk and there's no FSCS protection. Okay, I've just seen a question come through, so I'll just check that before I carry on. How long does it take for the first charge to be registered? So the first charge is registered on behalf of the investors. It's held with the security trustee. And in terms of how long, so obviously it would always be completed, that process, before the drawdown of any funds. Okay, so how to invest. So you can visit sourcecapital.co. You can register, pick a project, invest and earn up to 12% per annum. We also have a refer a friend scheme, so you can earn up to £250. In this way, you can invite a friend to invest with Source. You'll get up to £250 in cash when they complete their first investment. You simply share your referral code found on your dashboard to do that. So the way that works is it's £50 for investments of £1,000. It then jumps to £100 for investments of 5,000 plus, then 150 for 10,000 and £250 for investments of £20,000. This particular project will go live so on Thursday. So this Tuesday today, it goes live on the 12th on Thursday at 10 a.m. And you can find it there on the direct link sourcecapital.co/projects. Here are the ways in which you can contact us. So our relationship director, John Wilson, is ready and available to answer any of your questions. You can contact him there at his email address, john.wilson@source.co. And we also provide his mobile number there if you'd rather get in touch that way. If you want to just come straight through the platform, it's sourcecapital.co, and there's our number as well. So I'm pretty sure that's the last slide. So Chaz and Judge, do you think there's anything we've missed here? I'm just going to check for further questions. I know a lot of the things that we were talking about yesterday we've covered off, especially in terms of the demand in the area. And the fact that the build is continuing as we expected on the first phase. So obviously we don't foresee any issues there for the second phase either. I think I think one thing, wasn't it? You'd even put in some contingency for the weather. Is that right?
Yes. Yeah. So I'll take this one, Stephen. So we have regular risk reviews with the contractor, and the sorts of things that we're looking at are obviously weather. Although we're with blocks 1 and 2, we're out the ground now, so it's going to have less of an impact. But with this next block, then obviously that's a major sort of impact potentially. But we've already got time built in for bad weather. And actually being where they're situated, the winters are relatively mild for the next sort of couple of months. So we're pretty good from that perspective. We've also built contingency in for COVID, and that covers any of the crew potentially getting sick and that sort of thing. We can bring in additional crew if needed. and also from a materials perspective. So the contractor we're working with, we're working this time last year and worked through the sort of impact that COVID had. The major impact, and this was on a different project, the major impact was around materials more so than not being able to work. So the regulations allow for them to work because obviously you can't work from home when they're building houses and that sort of thing. So really it's more around materials. So what we've been able to do is work with local suppliers to bring forward our potential supplies. And so we've got supplies now ready pretty much until we're ready to complete the build. And so they're being held at the various suppliers, and they're set aside for our project basically. And that's down to the fact that the contractor's got really good network and good relationships with local suppliers. So I think, you know, we've kind of covered everything from that perspective, and we're in a good place.
Excellent. Okay. All right, great. Well, I think we'll leave it there. I think yeah, we've maybe run slightly over our anticipated half an hour. So so thanks very much, Charles and Jazz, for joining us on this live webinar. Everyone else, thanks for giving us your time on this lunchtime, and we hope to speak to you soon. All right, thanks very much. Thanks, everyone.